Welcome back. Now, as investors reassess their asset allocations in a shifting market regime, it may be a good time to challenge some assumptions about emerging markets. Grant Webster, who is co-head of Emerging Market Sovereign and FX within the Emerging Markets Fixed Income team at 91, says the risk difference between emerging markets and developed market assets is often overestimated. He joins us now to debunk some of these myths. Thank you so much for your time, Grant. This is quite an interesting topic. But I guess really before we dive deep into the nitty-gritties of the opportunities in emerging markets and the myths, what really stood out for me in your note, what jumped out at me the first time is the concept of a shifting market regime. What do you mean by that?
Hi, Zanati. Thanks for having me. I think the big thing is, investors like to look at volatility in markets because for them that's a sign of risk.
Yeah.
And what we've seen over the last few years is actually that the risk or increase in volatility has been in the developed markets rather than the emerging markets, right? So everything we've been through over the last few years, high inflation, the pandemic, these are things emerging markets have seen before and they haven't had to make big adjustments for.
Yeah.
But in the developed market, that we hadn't seen inflation in the developed markets for so long that it took them a long time to realize what was happening, to hike interest rates and to start to tackle inflation. And as a result, we've seen much higher levels of volatility in developed markets. And that's really the regime shift we've been noticing.
Yeah. And it's quite interesting because that volatility we've seen even now with the tariff story. But before I dig into the tariff story, because emerging markets have this big label of risk pasted to the assets. A lot of the time, investors then expect to be paid a premium for investing in emerging market assets. And I'm wondering now, has there been a shift, particularly looking at the fact that there is increased risk in developed market assets at this point?
Well, this is the strange thing, right? So
yeah.
If you look at yield in emerging markets, they're a lot higher than the yields you get paid in developed markets.
Yeah.
And that's for the perceived risks, as you mentioned.
Yeah.
Yet, if you look at the underlying fundamentals, the levels of debt in emerging markets are much lower than they are in developed markets.
Oh.
You would never, as a bank manager, lend to the person that has the highest amount of debt. You would
Yes.
rather lend to the person who has lower levels of debt. And so I think that's where the opportunity lies, in that you're able to allocate to a market that gives you a higher yield, but actually not necessarily worse fundamentals.
All right. So it's quite interesting also that you talk about this yield. And is there then opportunity? You talk about debt, but is there opportunity then to be found across the board in terms of the different asset classes in emerging markets?
Absolutely. Yeah. Emerging market equities have much better valuations than developed markets, particularly in the US. And they've been overlooked for many years now. We're starting to see a turn, of course. Emerging market equities have outperformed developed market equities so far this year. And we're seeing big inflows returning from foreign investors into emerging market equities. We're seeing the same thing on the fixed income side, where foreign investors are looking to diversify away from the US, and emerging markets are certainly a consideration. And I think that the shift that's taking place here is the US dollar, and that's what the conversation really is, because the US dollar, it's strengthened by about 40% since 2012. Now, if you're going to invest in emerging markets and the dollar's going to strengthen, that's actually going to work against you the whole time. We're now at a point where the dollar has started to weaken, and we think we're at the top of the dollar cycle, and it's likely to continue weakening for some time from here.
Well, talking about the dollar, we've also seen the impact that the tariff story has had on the dollar. And I'm wondering then, considering the relationship of the dollar with emerging markets, could the tariff story have a significant impact on the growth trajectory of EM?
Look, I think it's fair to say no one in emerging markets would like to be tariffed. It can be very damaging to many of these economies. But at the same time, it's very damaging to the US. Tariffs need to be thought of as a tax on the US consumer, because that's what they are.
Yeah.
And so it raises inflation in the US, it impacts the consumer, and it's likely to weigh on growth in the US. And that's why we think that we've seen the sort of peak threat from tariffs, and they're going to be worked away from here and fall down. Whilst EM is in a really good spot, they've diversified their exports away from the US to a great degree, still obviously reliance on the US, but there's been a lot of diversification there. So they trade amongst themselves a lot more. And because you've got the dollar going from a very strong level to a weakening level, we think emerging market currencies can perform very well.
Well, in the emerging market landscape, we have got a melting pot of different countries with different growth profiles and policies. When you are talking about, betting on emerging markets, what exactly are you betting on here?
Well, it depends which assets you're going to invest in. If it's equities, you want to see strong growth and performance of that market. If you're looking at investing in emerging market fixed income, well, what you want to see is lower rates, so interest rates coming down in those economies, because that supports the bond markets, and stronger currencies. And there's lots of room for that to happen, because after COVID, when we had inflation pick up and energy prices rise, emerging markets, like developed markets, hiked interest rates significantly, and they haven't fully unwound those hikes. So we expect interest rates can continue to fall, whilst the currencies have weakened, and with the dollar starting to weaken now, we expect currencies to appreciate. So those are the kind of the key things you're looking to capture.
And is there a story to be said here about the role of China, and also maybe looking for opportunities outside of China in that EM landscape?
Absolutely. I think Asia is a really interesting region right now, because if you look at Asian currencies, they have been structurally weak and undervalued, right? It's part of the policy mix there, and it's one of the things that's frustrated the US, right? If you have an undervalued currency, it benefits your own export sector and manufacturing. And so we think there's a story to play here, because part of the negotiations that's going to take place between the US and Asian economies around trade is going to involve their currencies, and likely they're going to have to let their currencies strengthen from here. So we may see a bit of that in China. We may see the renminbi rally from here. But to the extent that the renminbi starts rallying, we expect other Asian currencies to do even more. The Korean won, the Malaysian ringgit, those currencies can continue to strengthen. We've already seen huge moves in the Taiwanese dollar, and we expect that to continue. So there's a really interesting story at play there.
And just as we wrap up the conversation, just talking about the conversations between Asia and the US, of course, particularly between the US and China, there's a big story on chip export restrictions, and of course that now leads to the AI conversation and who really has the power for that, and really just innovation. And you say in your note that innovation is not just a US story. Did DeepSeek change everything?
I think it had a huge impact on things. To be honest, the technology that's coming out of China is incredible at the moment. They really are leading the way, and you'll be surprised to hear that from me. But in DeepSeek, they managed to achieve a tremendous amount at much cheaper levels. Same thing on the EV side. If you look at the electric vehicles coming out of China, they're very advanced. They're quicker to charge than US vehicles. On the military capability side, China is very advanced now. The investments in infrastructure are enormous, digital technology. So, I think it's part of the story here. The US feels threatened by this. And it's all part of the interplay around tariffs and the frictions between these economies.
Well, thank you so much for your time, Grant. Really, really appreciate it. Just debunking the myths about emerging markets and really honing in on the real story here. That was Grant Webster, co-head of Emerging Market Sovereign and FX within the Emerging Markets Fixed Income team at 91.